On the left, we have Tether, and on the right, we have USDC. These are the two major stable coins, and I'm sure you guys have been paying attention to financial media over the last few months. You've heard the term stable coins float around quite a lot, especially last week. And so I kind of just want to do a little segment to demystify stable coins a bit, explain on a simple level what they are, and why the U.S. passing the Genius Act is actually quite genius for the U.S. on a geopolitical level. So stable coins, I'll just give my quick little definition. They're pretty much a type of cryptocurrency, but unlike Bitcoin, Solana, Ethereum, on all the other ones you've heard about, they maintain a stable value, and it's usually pegged to a fiat currency like the dollar, which most stable coins are pegged to. Could be pegged to a commodity like gold, or even an algorithm managed supply system. And so USD, so Tether, and which is USDT, and USDC, which is the one released by or created by Circle, are two major ones pegged to the dollar. Previously, we had one by Terra Luna, if you guys remember that back in 2021. That was UST, and that was an algorithmically managed supply stablecoin, and that blew up, as you know. It's just the whole system collapsed when it got depegged, and then the algorithm tried to compensate by introducing more of the stablecoin, and it led to just a market-wide panic, and you saw people lose nearly 100% of what they had
So let
on
me
that
let me
blockchain.
so let me get this right, Ted. That stable coin actually had hyperinflation.
Yes,
Okay,
because
I
it's
just wanted to clarify
yeah.
that. Okay.
So therefore, therefore, the two major ones are backed by the dollar, and they're definitely the most stable ones currently. So really, the purpose of these stable coins, it's pretty much like a digital dollar um, in the crypto ecosystem, and it combines the benefits of the dollar and digital assets, so like speed, accessibility, and you can quickly transfer these across borders seamlessly and much cheaper than wiring money between bank accounts. Um, so yeah, that's pretty much what stable coins are. I want to talk about the Genius Act a little bit and why it's actually quite genius when we really dive deeper into it. And pretty much what they did was now stable coins require full reserves, public audits, and compliance just with um, just the financial regulations. And then now private companies can issue digital dollars backed one to one by U.S. Treasuries. And I want to highlight that line and click into and investigate and explore it more because that's really important for the U.S. and maintaining a global dominance, especially with the dollar on a global level. And so, pretty much when a private company issues a digital dollar, it receives the yield from the US Treasury. It's backed by the full faith of the US government. So it incentivizes private companies to introduce stablecoins and receive pretty much a quote unquote risk free yield. And when that happens, it increases the demand on our treasury. So theoretically, that would push yields down and that would make borrowing costs actually cheaper for the US. And right now, both of the major stablecoins, USDC, that's based in the US, and USDT, that's not currently based in the US, but the CEO did make a big announcement that they're going to move Tether into the US and create a US based stable coin backed by the US dollar. And that is huge. This is some compare it to the level of Bretton Woods in 1944 through 1971, as well as when the US, when Nixon removed us off the gold standard. Some say this is a third kind of financial infrastructure revolution for the US. And like I said before, how it creates demand for US treasuries, that's huge because that is how we fund our government's discretionary spending and really everything the government is meant to do, Social Security, Medicaid, Medicare. So that on a geopolitical level and physical level is important. And that will really help the dollar maintain its global dominance. And in response to this recent move, you saw we saw China quickly act, um, seeing this as a threat to their yuan. So they're looking to pass some other types of um, regulations as well in response to the U.S. and even Europe is retaliating a little bit. They're saying that You can't use non-EU stable coins to do business in the EU. So there's some little financial war going on here with stable coins. But right now, the bottom
Sure.
line is all 99% of all stable coins are pegged to the US dollar. And you understand what network effects are? It's pretty much as one network grows more and more people want to be part of that network. It's like Twitter, Instagram, Facebook, why they're so dominant. All your friends and followers, people you follow are on those networks. So of course you're not going to leave that network because there's no point. And that kind of just compounds on itself. And so with stable coins, since USDC, USDT are pegged to the dollar as well as some of the other smaller ones, this incentivizes other issuers to issue stable coins that's pegged to the dollar as well. So if China, if yep, Dan.
So you're saying that China is going to be like MySpace, and the U.S. the ones pegged to the U.S. dollar are going to be like Facebook.
Exactly, and it kind of just compounds on itself, that network.
Got it.
So in terms of geopolitics versus China and Europe, we definitely have a first step in this new type of financial infrastructure. So that's a little breakdown stable coins.
Yeah, I just got a couple questions. I got one question real quick because call me small-minded, but if you're pegging the coin, and I understand it to the dollar, it's more stable than any other quote currency. But if you're pegging it to the dollar, it really is just as stable as the dollar is. It's just whether the dollar is stable or not. So it's really, to me, not quite like a Bitcoin. It's indivisible because it's dollar. Here's the question I do have, though, because I'm worried about whether they're creating more currency like a bank can create, because the multiplier effect, you can actually increase the money supply just because the same dollar turning over and over. So that's one thing I worry about this. But the reason China and the EU hate this is because it's really, there's no difference between the tether and trading the US dollar. In other words, if they accept it, you can just trade with US dollars and wire the money. It's just, this is a much cheaper transaction way. It's also a way to I think, circumvent the currency where you don't have to change the US dollar to the yuan or to the euro. And so they don't like that because they're losing control. The Chinese government wants their citizens that's why gold is very hard to get out of the country. That's one reason a lot of the Chinese love Bitcoin, because if they could get a computer, they could get some of their assets out of China. This is kind of the same here. That's why they don't like the cryptos.
Exactly.
Yeah, okay.
You made a great point. Like, for example, getting your assets out of China. Bitcoin is volatile, for example. It's less volatile now because it's becoming more institutionally backed, but it's still volatile. So if you want a more stable way of getting your assets out of China, you buy some Tether or USDC and transfer it that way, and it's just as seamless and quick as Bitcoin or Ethereum.
Right. So look, folks, this is all about the currency wars. Forget about the tariffs. It's all about the financing of money, the time value of money. And so this is kind of the currency thing, and I'm glad we're taking the lead, because if it's not us, it's going to be China. But
yeah, we're definitely in a big lead. And just want to add a little point. Treasury Secretary Besson said the stable market could grow from 200 billion to 2 trillion in the next few years. So that's coming from one of the highest ranking officials in our government related to our financial system. So that's pretty big. And he really just understands the macro picture, since he was a global macro hedge fund manager as well.
Yeah, and with us, price is truth. So if this is a way to make money for our clients on a risk-adjusted basis with a sell discipline, we're going to participate. So,
yeah. So going off of that, I want to talk about one way to gain exposure to stable coins, and it's been quite hot, so it's a little bit extended and just needs some consolidation. It is Circle, the recent IPO. The IPO price was supposed to be $31, so it's not even on this chart. And it opened up at like $67, $68, ran over 300%, and currently topped out $300. Starting to build an IPO base here. But this is the one pure play way of actually capturing just the emergence of stable coins. Since you can't really buy a USDC and hope that goes up because it's pegged to the dollar, so it's $1. It's not going to go up. But buying the issuer USDC, there's a huge opportunity, because the stablecoin business, it's less risk because they're just earning that free yield from the U.S. government. So it's a money printing machine when you really think about it. And some facts for you: Tether became one of the most profitable companies on earth doing their business. That is the biggest stablecoin issuer. They make 13 billion annually from yields on USDT reserves, and that is $45 million per employee. So it's a really profitable business that these companies are in, and that is the pure play way to play in the stock market. It's one of the well, actually, there's one more, but it's through an ETF. It's Ethereum, and that's through ETHA, and we own that in GROTECTION as well as TurboTection. We caught this recent move up here, which was quite nice, about a 50% move. And so far, there's really no sellers, and that's really good to see. Volume's drying up, but Ethereum is known as, well, it's starting to get known as the hub of stable coins, and some believe it will be like the financial hub in crypto as well, especially when we start merging the traditional financial system with this newer decentralized financial system.
So what is your position size?
We currently have 3% since we've already trimmed. Well, yeah, we have about 3% left after 33% trim.
Because you took some profits.
John actually recently added on this pullback yesterday.
Yeah.
Yep. When we found support at 3,500, which is a pretty good high whole number support, and there's some peaks back here as well that support that too. So I'm not going to talk about too much of the technicals, just more about stable coins today and opportunities and ways to play it. In crypto land, if you do have a Coinbase account or a Kraken account, buying Ethereum, like I have on the screen, is one way to play it. Tron is another way to play it. I'll just bring that up. This is another way to play it. Tron, ETH, and Binance are three of the biggest crypto exchanges, and I think over 75% of Tether is transacted on these three networks, which is why they benefit from stable coins. And then the final one is Binance, the Binance coin, in a huge base right now. If you look at that, massive base, a little extended on the right side, so maybe just need some consolidation. That looks good too. A couple more higher beta names for those cowboys out there. You know, you're in the crowd. XRP.
We know you're following Ted. I just hope you have a self-discipline as good as Ted's. Otherwise, you're playing with fire. But
this one has an ATR 7%, so it's a lot faster. And actually, I forgot, you can play this in equities as well with XRPI. That is the 1X ETF. Of course, it's incomplete chart. Or if you want to be even more of a cowboy, you can get XXRP, which is the 2X ETF. Another option in crypto only, not in equities, is XLM. This and XRP really just provide large liquidity pools for cross-border payments, and they have their own stable coins as well. I think XRP's Ripples is RLUSD. So they're another stablecoin issuer, and why they've gone up so much with Ethereum as well. And if you really, really want a high beta one, this is my final one for you. CVX. No, not this. CVX. It has an 11% ATR. It recently made a 145% move, and it's flagging out here. So that is what I have to offer here. Ways to gain exposure to stable coins. It's definitely the theme of this crypto run, and I think we'll just continue to build out, especially we just established regulatory structure in our government for stable coins.
All right, good stuff.
That's it.
Dan, take us on home.
All right, folks, listen. I always say it. What's in your portfolio? What is your advisor telling you? Does your advisors sound like these guys? Or is he asking you for a tea time? Is he farming out, or she, and giving you some pie charts or us portfolio? Or it's just some asset allocation, target date, whatever, where you're not actively managing risk on a daily basis? If you want a better way, just go to Revere Asset. Up in the right-hand corner, there's a subscribe button. We do a short market video every night the market is open, about 10 to 15 minutes. We're the most transparent advisor, not in the United States, in the world that I'm aware of. I don't know of anybody putting out this much free content.